China says it would not impose additional tariffs on soybeans, pork, and other agricultural goods after President Trump postponed tariffs on some additional goods to October 15th. Trump also said yesterday he would consider an interim deal.
If we're going to do the deal, let's get it done. A lot of people are talking about it. I see a lot of analysts are saying an interim deal, meaning we'll do pieces of it, the easy ones first. But there's no easy or hard. There's a deal or there's not a deal. But it's something we would consider, I guess.
We're joined by today's panel, Aperture investor CEO Peter Kraus and Yahoo Finance's Pras Subramanian. Also joining us, BNY Melon market strategist Lale Akoner. Thank you for being here. So, Lale, as we look at the back and forth here on trade, how do you trade on it as an investor?
Yeah, so first of all, we do not see a trade deal, a meaningful trade deal, until the second quarter of 2020. And any trade deal will be based on three things. The first one is whether the U.S. consumer will be able to absorb these additional tariffs that were put in. The second one is whether China will be able to absorb these new tariffs. And the third one is whether how the election campaign of the U.S. administration plays out. So based on all these things, we do not see a trade deal happening in 2019. It will most likely happen in the summer of 2020. So we think that there is two major forces in the market right now. One is a easy global central bank policy, and the second one is obviously the U.S.-China trade deal. So we would say take on risk, but be more defensive.
Mm-hmm. Do you agree with this, Peter? I mean, that we won't see a meaningful trade deal until well into 2020. And how do you define meaningful?
Well, I think you make great points. In fact, I would say that it's even less likely you'll see one in 2020. I think the Chinese could well decide that they want to wait to see what happens in the election. Mm-hmm. And I'm not sure there's that much difference for them making a deal in August versus making a deal in January 2021. But obviously we don't know. I think that a meaningful deal is going to be challenging. I think a deal, some sort of deal is possible, but I think as we have seen with many of the things in the administration, there's a lot of talk about deals, NAFTA 2.0 being one of them, and what you actually get is something that's quite marginal. And so if there's any deal in 2020, I would sort of be with Lale that it's going to be marginal. And it may not happen because the Chinese may feel like they have the better side of the argument by waiting through the election.
And Lale, we should note, you look at emerging markets. Yeah. So when you say defensive, what does that mean from an emerging markets lens? I assume it means stay away from China itself.
China and China-related.
Right. So what is more insulated from this situation?
Sure. That's a very great question. So for emerging markets, we are looking for more fundamental factors playing into those countries. Those countries that have diligently reformed their economies after the taper tantrum are those countries that we're interested in right now, such as India, such as Indonesia. Brazil and Mexico look like a good place right now because they're more insulated from the US-China trade war. These are the countries that we're looking for that will be giving more pockets of growth and more opportunities.
Interesting. All right, Lale, thank you. Lale Akoner of BNY Mellon, market strategist there.